Hello, good evening. Welcome to Black Swan Business Setup Services live session, which we conduct every time to help entrepreneurs get insights on important topics that you need to know to run your business well. So, as you know, that today we have a special guest and a new topic, which is, I am sure, at the moment at the top of your mind. So, since the
Since the
taxation
taxation,
there have been like so many. One second, guys. I think there is some echo. I'll just check. Uh, One second. Okay. So since taxation has come, a lot of people are very inquisitive about how the taxes are going to work. Where should we form the company? What are our obligations? And what are the best practices? So all these questions were being answered on different milestones. You didn't get the picture all at a time. And obviously many doubts are already cleared, but the last question which was on everybody's mind was the impact of taxation on free zone companies, which was a very important question that was being asked to us by most of the entrepreneurs who are opening their companies over here. So today we have a guest, Mr. Satya Prakash, who is a chartered accountant. Last 13 years he's in the country, and he has also authored a book, and he will tell us about that. So such an amazing personality is there today to talk about some facts that you badly want to know at the moment to make your business thrive. So without wasting much of your time, I would like to pass on the mic to Mr. Satya. So first, Mr. Satya, please tell us a little bit about yourself so that our audience knows who you are, what are you doing, and why are you doing, and maybe then we can jump to the topic which everybody is waiting today to hear.
Yeah. Hi, Mr. Rupa. Hello, everyone. Myself, Satya Bharat. I'm a chartered accountant, chartered financial analyst, and a CMA, cost and management accountant. So I cleared my CA somewhere in 2010. So I have like 13 years of post qualification experience. So I started my career as a manager taxation. So it's like from the beginning, from like last 20 or 15 years, I have a lot of interest towards the taxation laws, like interpretation of the tax laws and all. So I have chosen that path in the beginning, from the beginning. Like I was working as a group and managed taxation, and then I started my career as a head of finance and accounts, and later as a group finance manager. And I'm here in Dubai from 2017. So out of like 13 years of experience, six are from Dubai. And after working for a company for an MNC in Dubai, so I started my own consultancy that is for the accounting and taxation. So we handle the accounting, bookkeeping, like as per the IFRS, outsource the CFO services, taxation services we offer, and also we arrange for the auditing. So given the current, as you all know, the topic that we have taken today is for the free zones. So I came across many business setup, the entrepreneurs who want to start up or maybe who are already there in the market. So they are in dilemma whether they should be in mainland, they should continue their business in mainland, or is there any advantage by switching to a free zone? And also those new entrants, new entrepreneurs who are coming into the market have some kind of dilemma whether to choose which free zone to be chosen or maybe a mainland. So hope our today's session will give you a lot of clarity on that point. Maybe we may not be able to conclude on everything because it is evolving. Still, there are a lot of more guidances we are yet to get. Even if we take up the frequently asked questions from the MOQ, from the Minister of Finance, they said they will still yet to come up with a lot of guidances, a lot more clarifications. So to some extent, we will try to brief on this particular topic.
Sure, Mr. Satya. I think everybody is super excited for that, and we would like to know, whatever knowledge you can share today in live session. However, we will be sharing your contact details with our audience so that they
Okay,
can also contact you for any specific queries which we are not covering in today's session.
sure.
So I think I'll give it over to you so that you can start with your session.
Okay,
You can now share your presentation so I can share it with the audience.
fine. Sure, Mr. And if there are any queries coming up in the chat box or somewhere, you can just let me know so that I can take it up at there
Yeah.
and then. So is it my screen visible?
Yes, absolutely.
Okay. So I'll start with the topic that we are eagerly waiting for. So this is basically for the corporate tax. The corporate tax laws implication on the free zone entities. And before we proceed further, I just want to give a disclaimer. You can have a look into that, wherein like this is only basing on our analysis and our personal views. So if you want to have a detailed confirmation, you we request you to go through the respective laws, ministerial decisions, cabinet decisions, and FTA decisions. So this is from our point of view. So this is a disclaimer what we want to give ahead of our session. Okay. Sorry. So to before we start the session, we want you to know few things like who is a free zone person as per the law. Law has defined free zone person is any entity, any juridical person. I'm repeating any juridical person, meaning any kind of companies or public sector companies or private companies. So those companies which are registered, established, incorporated, or otherwise registered in the free zone are called as free zone persons. So hereafter we will use the acronym FZP, like free zone person means you have to assume that it is a company, not a sole establishment. Sole establishment is not considered to be a free zone person. Okay, so it is a juridical person, a company incorporated, established, or otherwise registered in a free zone. It also includes a branch of a non-resident person registered in a free zone. So these are the two things that was given by the law. If you take out the respective definition in the law. Now the question starts. Okay. Now I will take up some questions on by myself to answer it. After reading this, small definition, what is the situation? What if what is the status of an offshore entity incorporated in the ZAVSA? So hope you all know that there are the free zone companies you can start up. There are one more concept of offshore companies in Jebel Ali free zone and a few other free zones are offering it. So what is the status of this one? As per our understanding, they are also incorporated in the free zone like a ZAVSA. So it is also considered to be a resident taxable person. Offshore entities also comes under the corporate tax purview as a resident taxable person. So this is our analysis and understanding. Question number two. What if a company, which is a mainland company, having a branch in free zone? What is the status of such branch? Okay, this branch will be considered as if it is independent and separate from the mainland company. I'm repeating, a branch of a mainland company is registered in JAVSA. For example, any free zone you take it, DMCC or maybe IFSA, whatever the free zone you take it, Maidan free zone, the branch will be considered as if it is independent and separate from its mainland company, and that the income of that particular branch will be dealt by the this particular law what we are going to discuss now. So the branch income will be comes under the purview of the free zone. Question number two. So should I need to have a separate registration for the branch? Should I need to have a separate registration for the mainland company? No. Mainland company and branch one and the same in general. So you don't need to have a separate corporate tax registration. You may need to have a separate registration in the Jablali, I mean Zavza, but then for corporate tax registration for the branch, you don't need to have separate registration for the mainland company and its branch. Question number three, branch of a foreign company. Okay, now we have discussed about the mainland company. What about the branch of a foreign company? Same thing. Branch of a foreign company is also considered to be a free zone person. So the tax of this particular branch is dealt by the next slides, whatever we are going to discuss. Is the tax treatment same for all the entities across all the free zones? Okay, now there is an entity in Maizan free zone, one entity in Hamria free zone, one in DMCC, one in World Trade Center. Okay, is the law applicable for all the free zones across the same? Yes, it is the same. But then before we confirm by ourselves it's a free zone or not, you have to give a call. You have to contact your respective free zone asking whether they are eligible as per the corporate tax. Meaning, like even though they are called as free zones, but in corporate tax, frequently asked questions, they are telling us to give a call. You are by mail. You check with your respective free zone and ensure that they are already covered under this. So you have to communicate with your free zone to ask whether they can get the benefit of the corporate tax. Once they confirm it, it is across all the free zones, the same law is applicable. There is no difference between two free zones. Final question. So far we have discussed about the free zone person. Who is a non-free zone person? Any person who is not a free zone person. For example, a mainland company is a non-free zone person. An outside country, for example, an Indian company or a Chinese company which is outside UAE is also called as a non-free zone person. Hope everyone is clear. So I'm proceeding for the next one. If you have anything, you can just put it in the chat box so that we will take up the question. Now, most of you are already aware of what are the free zones that are available in the country. There are at least 40 or 50 plus. We try to list it down. Okay. In the Dubai, so these are all the free zones that are available, while in Sharjah, Abu Dhabi, Oman, Ras Al Khaimah, Fujairah, Al Quwain. So these are the free zones that are available. Some of the free zones have highlighted in the red color. The font is in red, meaning they are called as designated free zones. Why we are bifurcating? We will see it in the next few slides. We will understand why we are bifurcating this yellow and red. Sorry, this black and red. Okay. Now we have discussed on this. What if a free zone person? Now it is the other question, the other side of it. We have discussed what if a mainland company having a branch in free zone. Now the case is reverse. A free zone company having a branch in mainland. Having a branch in mainland means they have a small setup. They have taken some HRE. They made a small setup to communicate with their customers. So how to deal with this situation? As per the law, this particular office or branch or factory or workshop, whatever, a free zone company, a free zone person having in mainland considered as a domestic PE. Domestic PE stands for permanent establishment. So this particular branch is considered to be a domestic permanent establishment. Why we need to learn it? Because the 0% tax rate is applicable only for the income of the free zone person, qualifying free zone person, but not for the domestic PE. So we have to keep the books not that separate, but we have to have a separate tracking. How much you are earning from the domestic PE, I mean the branch in the mainland or office in the mainland, how much you are earning from your free zone, the entity in the free zone. Same. What if the free zone person has a branch in outside UAE, just like having in mainland? What if you have outside a foreign branch? That is called as foreign PE, foreign permanent establishment. PE stands for permanent establishment. So you should also have a separate track of expenses, income, gains, and all, so that it will be, you have to offer the tax rates applicable to the tax rates are different for free zone entity and its domestic PE and foreign PE. So you have to have it separate track of it. Branch accounting you should maintain. Okay. Now that we have discussed about the free zone person, okay, so what is the situation? What if a mainland having a branch in free zone person? What if free zone person having a branch in mainland? So different scenarios we have seen. Now that we have cleared on the free zone, which free zone entities are called as free zone persons? Every free zones are covered, but then you have to give you have to communicate and check with them whether they are already, because Ministry of Finance is communicating directly with the free zones and they are informing them that they are eligible, that particular free zone is eligible for the corporate tax. So you don't take it by yourself. You have to give a call, communicate with your respective free zone and get a assurance by phone or at least by communication by mail preferably. Okay, I'm a free zone. Now I decided I gave a call to my Maidan free zone or maybe some free zone, and they confirmed that yes, you are a free zone entity. That they are eligible for a free zone corporate tax relief. Then good. Okay, I decided I'm a free zone person. But can I get the tax rate at 0%? No, you have to follow, you have to comply with 6 conditions, all the 6 conditions. I'm repeating all the 6 conditions. If you miss at least one condition, you will not be eligible to get this benefit of 0% tax rate. All the 6 conditions to be done. So now we have a free zone person. He is ready. He want to become a qualifying free zone person. Who is qualified? Only whoever qualifies, I mean whoever comply with all these 6 conditions are called as qualifying free zone person. So what are these conditions? It is like A, B, C, D, E. To make you remember easily, I like an acronym I want to give it. This is like A, B, C, D, E. A starts with adequate substance, meaning Your company in the free zone should not be just a paper company, to put it straight. So they don't want only paper companies to get the benefit. You have to have an adequate substance, meaning you should do your core income generating activities. Actually, what the core income what is the purpose of the company? There are some activities you want to do using the company. So those core income generating activities should happen in the free zone. So that substance should be there in the adequate substance. Okay, how can I prove that I have an adequate substance? They also gave you regarding based on the nature and level of the company, you can prove that you have an adequate substance in free zone by showing, yes, I have these many assets sitting in free zone. I have these many employees working in free zone. I'm incurring so and so operational expenditure. I'm expense at least 80% of my expenditure I'm incurring it's sitting in free zone. Then you can say, yes, you have substance. Okay, so if you want me to take an example, you have made a small setup in say Maidan free zone, for example, and Maidan free zone assume that it is eligible for this corporate tax, this particular relief or regime. In that case, you have one small office, maybe a flexi desk, but then your actual operations are happening in the mainland. Then you cannot prove any adequate substance in free zone, so you will not be considered to be a qualifying free zone. You may be a free zone person, but you are not a qualifying free zone person, meaning only qualifying free zone persons can get the benefit of tax at the rate of 0%. So you have to have all the documentation ready, proving that you have assets, employees, expenses happening in the free zone. Okay, now what if I want to outsource? Okay, I'm a kind of person, I don't want to have huge assets in my balance sheet. I don't want to employ a lot of people. I don't want to handle all these operations. Can I outsource? Yes, you can outsource, but you have to outsource to another free zone person. Let him be a related party or not related non-related party. But you have to outsource to another free zone person under your supervision, adequate supervision. Adequate substance you have to prove. If you cannot prove, what you can do generally, what you can do otherwise, you can outsource your work. So you don't buy assets, don't have employees, that is okay, but at least you outsource your core income generating activities to another free zone person. Let him be a related party or a non-related party, but that outsourcing should be under your adequate supervision. Am I clear? So outsourcing is also allowed. Outsourcing under adequate supervision is considered to be adequate substance, but should be given only to another free zone person. Okay, so once this is the one condition, one full condition, you have to prove this. Okay, once you are done with it, you will go to the next step. Books of account should be maintained as per the IFRS, International Financial Reporting Standards, and you have to get the free zone persons have to get their books of accounts audited. Like financial statements should be ready. Audit is mandatory. This is a precondition for you to enjoy the benefit of qualifying free zone person of 0% tax.
So
How
Satya,
many
sorry
years I have to? Yeah.
to break you. Just wanted to ask. So whether you are falling in getting the you're qualifying or not qualifying, but the audit report is mandatory for all companies, all free zones, or is it only mandatory if you want to apply for the qualification?
See, audit works two differently. So one is audit under. So let me have a broader discussion on this. Audit is required for all the companies, mainland companies, by virtue of Commercial Laws 2015. Okay, that is a different law. Now coming to corporate tax law for qualifying free zone person, if you want to enjoy the benefit of qualifying free zone person, you have to have the audit even if you have 1 dirham of revenue. For other than qualifying free zone persons, for example, if you're a mainland company and if you don't want to enjoy this 0% tax, even then you have to mandatorily have the audit if your revenue is more than 50 million. So these are thresholds. 50 million for non-qualifying free zone persons. For qualifying free zone persons, even if it is single dirham, they have to get it audited, even they are into losses or whatever situation.
Okay, noted. Thank you.
Okay. But apart from corporate tax laws, there are other laws like commercial laws that made it mandatory for the mainland companies. The respective free zone regulations are made it mandatory for the free zone companies. Audit is mandatory, respect of their revenues or whatever. Okay, and it has to be you have to keep your, I mean, the free zone persons have to keep their records at least for 7 years. This is common for all the taxable persons, not only for free zone persons. They have to keep records for 7 years. Be careful, I'm using the word here, all records. All records include those records that should show your adequate substance. So your adequate substance is not just by words, you have to prove with the documents. So even that is also part of your records, and you have to keep it ready to showcase. C. Comply with the arm's length principle and transfer pricing documentation. Arm's length principle means, like, for example, if you are if you are doing any transactions with your related parties or connected persons, meaning, like, for example, there is a, if one person is holding one company in free zone, one company in mainland, and if there is any transactions between these two companies, the mainland company and free zone company, that should happen at the arm's length principle. Arm's length principle means, like, at the market value, the fair market value. It should transact at the fair market value. Why? Why they brought in as a mandatory provision? It is very simple, because if they can manage, if they are related parties, if they know each other, if they can influence the other, obviously they will try to shift the profit of mainland to the free zone, because free zone company can enjoy the benefit of 0%. So to avoid such scenarios, they are very clear: if there is any transaction between two related parties or connected persons, they have to, that should happen at the arm's length price, meaning at market value. And this document, sorry, this TP documentation should be mandatorily kept. Then the fourth transaction, the fourth condition, de minimis requirement. This we will be seeing in the coming up slides. So you just remember there is something called de minimis requirement. We will be seeing in the forthcoming slides. So then once you are, so the tax rates what given was qualifying income. Okay, now you are a free zone person. You have complied all the 6 conditions. Now you are a qualifying free zone persons. Okay, even after qualifying free zone person, can I get the complete benefit? No, you have to bifurcate. Only on your qualifying income you will get 0%. Your other income will be still at 9%. And also you cannot get the benefit of 375,000 straight. Whatever, even if it is single dirham, you have to pay. If there is a non-qualifying income of 1 dirham, you have to pay 9% of that. We will be seeing these things once again. So if you are done with everything, you are a qualifying free zone person. The last one is election. Corporate tax law has given an option to the free zone persons. If you want yourself, you voluntarily want to pay the tax. If you don't want the benefit of 0%, just elect yourself to be subject to corporate tax. Okay, that is an election given to you. So if you want to be qualifying free zone person, you should not elect that. If you have elected, you are just like any other taxable person. So election should not have made to be subject to corporate tax. You should not choose that. Only then you are eligible for a qualifying free zone person. So these 6 conditions are very important. These are the basic conditions. Once you are established, you are sure of these conditions, then we will be proceeding for the next one. So basically this works like this. Know yourself. First of all, know about yourself. The process goes like this. Then know about your customer. Know about your activity. Okay, know about your free zone. So it's not a straight answer that the moment you are a free zone entity, you cannot get the bad benefit of 0% tax rate. There are a lot of things that you have to assess yourself, or maybe we can help you in assessing your transactions on that. So step by step, this is what you have. Once you comply with all the 6 conditions, then you are qualified to be qualifying. I mean, you are now called as a qualifying free zone person. So this is a journey of 6 steps journey. Okay, now you are a free zone person. We have discussed it so far. Are you complying with the 6 conditions? All the 6 conditions, not even one. If you are missing, you are not eligible to be a qualifying free zone person. For example, if you are missed at least one transaction, if you are not complying with 6, not any one transaction, any one condition, the 6 conditions, then you are assessed, you are taxable like any other mainland entity. You will not get the benefit of 0%. Okay, now what if I comply with all the 6 conditions? And even then, You are a qualifying free zone person. You are called as a qualifying free zone person, but still you have to take your entire income. You have to bifurcate into three buckets. One, your qualifying income, 0% tax rate. Any income attributable to your domestic PE. If you remember, any branch of a free zone person in mainland, for example, a free zone person having its branch in mainland or maybe outside UAE, that is called as domestic permanent establishment, foreign permanent establishment. So that income is subject to 9% tax rate. And income attributable to immovable property. So there is slightly a different case study that we will be going through. So for immovable property, you will not enjoy the 0% tax rate unless certain conditions are no. In only in one scenario you can enjoy that. Okay. So free zone person, you already come to a qualifying free zone person. Okay. The moment you are a qualifying free zone person, are you enjoy? Can you able to can you enjoy the benefit of tax rate 0%? No, you have to still bifurcate your income into three pots. Only the first part is eligible for 0% tax rate. Okay. Now our interest is more into this qualifying income, right? So we should know what is qualifying income. Then we can enjoy the benefit of 0%. There are three items that were given in the qualifying income. So what constitutes a qualifying income? Three elements. One, you are a free zone person and your customer is also a free zone person. So now we come to a next step number 2, know your customer. So you have now this basing on your customer. Who is your customer? He is also just like me, like any other free zone person. Maybe in the same free zone, maybe I have my entity in Javza. Maybe he also having his entity in Zavza, maybe in Maidan, maybe in World Trade Center, whatever other free zone he is having. And what I am doing with him, what kind of transaction I am dealing with him, I am giving an activity, any activity other than excluded activity. So please remember this term. There are 7 excluded activities they have listed. As long as I am giving other than this 7 excluded activities, my money is qualified to be a qualifying income. I mean, the income, whatever I get from that transaction is a qualifying income. Free zone person to other free zone person,
So in
anything
easy
other than the
words,
7. Sorry?
qualifying income, that means it's going to be tax free.
Yes, qualifying income is tax free. But what is qualifying income is what we are trying to see.
Yes,
3
yes.
elements. Yeah. The second element, not that every time you can just do your business only with other free zone person, right? So you will also be doing with a non-free zone person, meaning mainland entity, maybe exports, whatever you will be doing it. So in such cases, how to handle it? Okay, they have listed 13 qualified activities. So 7 excluded activities, 13 qualified activities. So these qualified activities, if you are providing, then that also part of the income from that transactions can be part of your qualifying income. Okay, free zone person to non-free zone person, it should be within the qualified activity, the 13 qualified activities, and should not be an excluded activity. So if they specifically mention that is an excluded activity, and even though it is falling under qualified activity, so your excluded activity will win. So you will not be eligible that benefit. We'll take that example, why that is contradicting, in what way it is going to contradict. Third scenario, the residuary. Okay, what if a free zone person providing to other free zone person an excluded activity? What we have discussed here, it should not be an excluded activity. What if he is providing that? Similarly, if they are providing to a mainland company, which is not a qualified activity, generally they are supposed to be providing only qualified activity. What if they are providing an excluded or non-qualifying activity? Then also it is part of your qualifying income. It is allowed, but there is something called de minimis requirement. What they mean to say in simple words, so you are allowed to do the activities other than the first and second. You are allowed to do, but don't do more than 5%. Okay, 95% keep yourself into this ambit in the first two. So they want you to keep yourself 95% focus on these 1 and 2. The third one, okay, the certain deviations will happen, but it should not be more than 5%. So all these three, together is qualifying income. Am I clear till here? Anything in particular? Maybe you'll have more questions the moment once I go to the qualified activities, excluded activities, because that is industry specific. We classified in for each industry how it operates. I mean, how it is going to impact. So qualifying income. Now we are our interest is towards what is qualified activities, what is excluded activities, right? And then we have to know what is de minimis requirements. So far, just to make a quick recap, we understood there is a free zone entity. Then we understood we have to comply with 6 conditions. The moment you touch upon these 6 conditions, you are called as a qualifying free zone person. Even though you are a qualifying free zone person, you will not get that straight away 0%. You have to break up. You have to break your income into 3 parts: qualifying income, income from domestic PE and domestic permanent establishment and foreign permanent establishment, and the third one is income from immovable properties. The first one we are talking in qualifying income, three type of incomes are covered here. Qualifying activities, very debatable, and as per MOF, Minister of Finance, they are going to they are going to give us a guidance on each activity. Okay, what is manufacturing as per them? As of now, there is no definition as such for the manufacturing. What they mean by trading or distribution? So they didn't give anything as such. So they are going to come up with a lot of guidances as per them. So we are awaiting for that. But then this is what the basic understanding what we are going to give you. Sorry. So why we are knowing about the qualifying activities? Qualifying activities can be given to even non-free zone persons also. You can give it to free zone persons, non-free zone persons. Okay. But it should not be an excluded activity. Meaning you are a free zone entity, you have a big setup, factory, manufacturing setup, everything is ready. You have a textile factory ready, and there is a person from mainland come to your factory asking you to get some kind of textile, what is the garments in his brand name. Can you do the activity for them? So processing of the goods and materials, manufacturing of goods and materials for a mainland entity is also allowed because that is part of your qualifying activity. So a free zone entity can do these activities, what we are going to see now, the 13 activities is allowed even if you want to do exports, allowed even if you want to do with the mainland entity, allowed. These are green list. You can just go and do to whomsoever it is required. So first one, manufacturing of goods and materials, processing of goods and materials. Trading, so this is the most hot topic, a debatable and having a divided talks. People have their own understandings, including me. The confusion starts from the definitions. So they have given the distribution of goods or materials. The trading, basically you can understand it as a distribution means trading, general trading. Trading of goods or materials in or from a designated zone to a customer that resells such goods or materials or part thereof or process or alter such goods or materials or part thereof for the purpose of sale or resale. Basically, they mean to say this particular part. So this part I'm talking about. If you are selling to end customer, so B2B transactions are allowed, are covered under this. B2C, if your entity directly selling to a end user, then that is not covered under here. So retail, from a retail, if they are doing some free zone entity, sitting in designated zone, selling to the end user, not covered by the qualifying activity. But the same free zone entity, if it is selling to another person in mainland who further sell it, means like he is doing wholesale trading and the mainland company is doing the retail trading, only B2B are covered. Okay, so that is the one clarity. So the second point, trading to mainland is covered. Yes, covered as long as that entity is in designated zone only. So an entity is in Maidan free zone, selling goods to a mainland company. Maidan free zone is not a designated zone. Selling goods to a mainland entity, is it covered? No. Then when it is covered, a Maidan free zone selling to another Maidan free zone or maybe to another free zone entity that is covered. So how can I get the benefit? So this is the major part. A lot of the client, or maybe um, those business entrepreneurs who want to get into the trading and in dilemma which free zone to choose. As of now, we can say you have to choose. It is highly advisable to choose a designated free zone. So for that reason, we have highlighted in the red color what are designated free zones and what are other free zones. If you remember, then the first or second slide, we have given the entire list of designated free zones. So you have to keep your setup in that particular designated free zone so that you can trade to mainland, you can export, you can do third port shipments. Third port shipments means your company is in UAE and you are trading, you are making the trade between China and India. The goods are not actually routed through UAE. That is called as third port shipments. In India, we generally call it as merchant trading. So in Indian language, merchant trading, high sea sales, sale to other. So everything can be done if the entity is in the designated free zone. So how can I get this confirmation? As far as the first three, as far as the first three, sorry, let me take another one. This is slightly important. Most of the people are interested to know about this. That's why I'm just emphasizing on this particular point. So the first three are straight away covered by the law. So if you go through the law, ministerial decision, cabinet decision, you can understand by yourself. How about these two? Sorry, the last one also as from the law. But only these two are from the ideas given by the MOA. For example, Ministry of Finance has made some corporate tax awareness session on 22nd of June in Dubai Chamber of Commerce. So where they gave this kind of their view is this. They even want to include third port shipments, merchant trading. So they themselves have told, but on paper you cannot see it anywhere, but it is from their words. So this is a debatable topic. We don't want to confirm anything, but this is just as per their views. It is the views of the FTA by itself. It is not from, Minister of Finance or FTA by themselves. This is not our understanding or not our analysis. Am I clear or how it is? Ms. Rupa, is there anything that, any questions on this particular point?
No, no, not yet.
Okay, fine. So these are the balance other qualifying activities, total 13, right? So this is, they have very clearly told, Minister of Finance is very clear that they want to make Dubai or maybe UAE as a logistics hub, financial hub. They have a lot of they are giving a lot of prominence or importance for the logistics and financial services. That's why they have given, if you are ownership, managing, operation of the ships is a qualifying activity. The same is the case with financing and leasing of aircraft is a qualifying activity. Logistic services, if you are providing any logistic services, it is a qualifying activity. Fund management services, wealth management services, reinsurance, not insurance, reinsurance services are also part of your qualifying activities. And if you are providing any related party transactions, headquarter services, meaning like providing senior management and all. For example, your headquarters is in Dubai, while the other offices may be in India or maybe in China and all. The senior management is sitting in Dubai. So is that allowed? Now, because senior management taking the decisions, you are charging something from your Indian company, from your China company. The money flows into Dubai. So do you need to pay the tax on this particular money? As such, it's a qualifying activity. So if that particular free zone entity qualifies, complies with other 6 conditions, they don't need to pay. Treasury and financing services, you meaning like a company can extend the loan, maybe interest free or with interest, to its related party. It is covered under qualifying activities. Holding of shares, that is most common nowadays. We see we will have one company here, be it offshore company or a free zone company, that is exclusively for the holding of the shares of another entities across the globe. Is that a qualifying? Yes, it's a qualifying activity. And any activity that is incidental to the top 12. Any activity that is ancillary or incidental to the top 12 is also part of qualifying activity. because you should be clear. Basing on this, you have to decide which free zone is beneficial for you. If you are into trading and if you are focusing onto the mainland or maybe exports, designated zone is the best one for you. Or if you are into manufacturing, logistics, financials, or maybe any other related party transactions, any free zone is same. It's not going to make any difference for you. It is the same thing. Okay, designated zone has got an advantage when it comes to trading industry. Only for the traders, designated zone is the right destination as far as the things that are available from the Ministry of Finance now.
So now, for example, in designated free zones like Javza, right?
Yeah.
Okay.
Now we have seen the qualifying activities. What is the relevance of qualifying activities? A free zone entity can give this qualifying activity to anyone, mainland company, exports, outside UAE or to another free zone person. So whatever the income that they get from any of these 13 activities, it is 0%. It is eligible for the qualifying income. Now we have to exclude activities. If free zone person is providing any of these seven activities, then it is not, the income on this excluded activity, it should be within that 5% zone. You remember there is something called de minimis criteria, what we talk about. So maximum you do whatever, but 95% you focus on the first two items. The third item should be less than or equal to 5%. So now we are talking about the third item. So if you want to give these services, you can give it. That's fine, but ensure that it is less than 5% of your total revenue. Okay. Out of all these, the one which is very important is any transaction with the natural persons. Should be very careful. A free zone entity, a company in free zone, if it is providing any services, for example, what we have seen it here, qualifying activity, right? You are trading you are trading to a natural person. A free zone entity in SAFSA designated zone also, if it is selling to a natural person, it comes under excluded activity. So it is even though it's a qualifying activity, but your excluded activity will override it. So free zone entity should be little more careful when they are transaction with the natural persons. Natural persons obviously include sole establishments and let me not take the deviation, but then they have given it like a natural persons, but generally natural persons also include sole establishments. So you have to re-look into your transactions when you are doing with the natural persons. Apart from these four, if you are providing any transaction natural person by a free zone entity, that is an excluded activity. You will not be, that is not your qualifying income unless it is less than 5%. De minimis requirements. So far, we are discussing that your non-qualifying free revenue should be less than your 5% of the total revenue or 5 million. So there are some calculations they have given. What is non-qualifying revenue? How to calculate the total revenue? So these are more into mathematical things and all. So if you're really interested, we can explain on this. But then the logic is same. Whatever we have discussed it so far, the same thing you can see it into mathematical style. So you have to compute your total revenue and you have to compute your non-qualifying revenue. And you have to, one of the condition is de minimis says your non-qualifying revenue should be less than 5% or 5 million. Only then you are eligible to be for the only then you can be qualified as a qualifying free zone person. So just let me take a quick example. Your total revenue is say 25 million. 25 million means 5% of it, 1.25 million. So up to 1.25 million, you can do the excluded activities or maybe with mainland companies and all, it's okay. But if you are crossing more than 1.25 or 251 million also, you will be completely losing this benefit. So you should be very clear how much you are getting the non you when you have to bifurcate your revenue into two, how much you are earning from your qualifying activities and how much is from the non-qualifying activities, non-qualifying revenue. And you have to ensure if it should be less than 5%. What if it is not, what if it is more than 5%? You are not eligible to be a qualifying free zone person. You have to pay like any other regular person. Taxable like first 375 is 0, later 9%, something like that.
So how the bodies are going to identify the different billings. So is it like by seeing what is written on the bill, that means the invoices will be audited very minutely?
They mean to say, as per one of the frequent asked questions, FAQ, they say it is the free zone entity's responsibility to ensure everything is proper. However, they have the right to come and inspect anytime. So they may come to you for checking the audit. And that is the one major reason why they made an audit as mandatory. So, for example, if you are getting your books of accounts audited, the auditor's responsibility to ensure the calculation is right.
Okay.
If he is enjoying the qualifying free zone person benefit, it's the auditor who has to take he has to counter check everything, all the six conditions have been fulfilled or not. It is auditor's responsibility along with the is 100% 99% responsibilities on the free zone entity.
Got it. Got it.
But then auditor will help him to understand whether it is proper or not.
Okay. Okay.
So I'm going to summarize the entire thing, whatever the discussion that we had so far, in one single slide. So summary of the UAE corporate tax. Are you a free zone person? First thing is yes, I'm a free zone person. Next question. Have you elected to be subject to corporate tax? If you have selected, then you will be, if you have selected to be subject to corporate tax, you will be paying just like any other free zone person, any other non-free zone person. If you are not selected, then the questions comes. Are you maintaining the adequate substance in free zone? No, again you pay it. If you are maintaining adequate substance, then next question. Are you maintaining the books of accounts? Auditing is done? Yes. If you are okay with that, then we'll be going with the complying. Are you complying with the arm's length principle and documentation? If it is yes, then you will come to the next step. If in anywhere, if you are no, then you are taxed like any other mainland entity. Are you satisfying the de minimis requirements? Yes. If all the conditions are done, then you are qualifying free zone person. The one catch here is autoplay. Okay. So one catch here is now today, for example, you have agreed that you want to be a qualifying free zone person. Maybe after 6 months, by mistake or because of some reason, you could not able to meet any one of the condition. One condition you missed to meet. For example, you have crossed beyond 5%. Your non-qualifying revenue is now 6%. Then keep it in mind for next 5 years, you will be ceased to be a qualifying free zone person. You cannot get this benefit for next 5 years. So this year you have complied with six conditions. You started your journey. In between the journey, maybe in between the year, because of some reason, one of these six condition, or any of these six condition, you somehow not able to meet. Then for next 5 years, you are barred to be a qualifying free zone person. Then you will be taxed like any other non-free zone entity. So you should be careful. You have to have an analysis up. So it's not just like a one-time activity. So that's what I mean to say. It's not a one-time activity. It is a routine. It's like a continuous process. You have to always ensure that these six requirements are always you are meeting throughout the year. Otherwise, you will be for next 5 years you are barred to be a qualifying free zone person. Now, okay. Having said that, your source of income you have to classify into three. Qualifying income, which we have seen, tax rates will be zero. Attributable to domestic and foreign PE, like branches in mainland or branches in outside UAE, it tax rate 9% with no benefit. You will not get the benefit of 375,000. Remember. Similarly, if we have a commercial, so what they have given, if it is a commercial property, for example, you are a real estate company, you are holding some property in free zone, and if this property is a commercial property, and if you are giving to other free zone person, it is 0% tax. If it is a non-commercial property, to whomsoever you are giving, it is going to be 9% tax. Again, I'm telling. So now you have to understand what is commercial property. Commercial property means any property that is exclusive used for the business or business activity, but not the hotel, motel. So if you are using it as a accommodation, residential accommodation, or maybe labor accommodation, that is not eligible for this. Only commercial property means exclusive for the business or business activities. If you are giving on a rent to another free zone person, and the location of the commercial property is also in free zone, then yes, you will enjoy the benefit of 0%, otherwise 9% straight. So this has given you hope. We covered almost all the conditions, six conditions. Plus, once you qualify for that, even then, what kind of incomes you have to bifurcate at what rate it will be taxed.
We have some questions, Satya. Should I ask?
Yeah, sure.
So, one, we have one client. How do we ensure the customer resells the goods? What kind of documentation should we obtain?
Um, you can take a declaration. You can take a declaration from the respective person that the purchase is meant for the further supply, and that is also this concept is not new to us. This concept is also there in the VAT. Just to highlight on that, in case of VAT loss, if a designated a Zavza company selling to another Zavza company, then the second Zavza company has to give the declaration to the first Zavza company saying that it is not for the self consumption but for captive consumption. Captive consumption means either they will sell it as it is or they will use this product, whatever they're buying, for the manufacturing or maybe processing of other goods. The declaration is sufficient. There should be, you can take a declaration from your customer to prove that.
We have another question. Is the treatment same for distributors and traders with distribution of goods?
Distribution as such, they have not given the definition. We have to wait for the guidance. But general understanding is distribution covers at length, including the trading, your wholesale trading. I mean, any trading that covers the distribution is a larger term. It's large enough to cover even the trading, is in our opinion. But whether it is the same with the MOF, we have to wait and see from their guidance. But as such, you can take it for now as the distribution covers trading.
Okay. We have another question. Is holding of share includes mainland company in which QFZP held the share?
Yes, holding of shares can be anyone. Like you have your setup in free zone. The activity of the free zone is holding of the shares. Any share, be it maybe an Indian company, Chinese company, mainland company, or other free zone company, you can hold, and that is qualifying activity. For example, if you are getting dividend or maybe if you are getting some capital gain, that is a qualifying income for the purpose of this free zone entity.
Okay. And somebody said, kindly summarize the taxability of QFZP transactions with mainland companies.
Um, Qualifying free zone persons with mainland companies is only those 13 qualifying activities. You have to check, you have to ensure that you are providing only those 13 qualifying activities. Then you will get the benefit of uh, this 0% tax rate. However, you can take deviation up to 5% maximum. 5% deviation is allowed. And also, you have to ensure your qualifying activity is not again in the excluded activity. For example, manufacturing of goods or materials is a qualifying activity. But if this manufacturing is meant for a natural person, this is an excluded activity. So your excluded activity is superior than your qualifying activity. So you have to provide qualifying activity to the mainland company. At the same time, you have to ensure that it is not listed in the excluded activity.
So, Satya, what I would like to ask is that with so much of classifications with the taxation in the for the free zone companies, for example, if
Okay.
somebody is just opening a mainland company, does that make it more simpler? Like there, it will be just 9% on the whole profit that
No,
you are making.
they don't need to see.
Or
That's
does this
fine.
apply
See, if
here
you
also?
yeah. So if they mean to, they have given the option. Okay, you go and have your set up your free zone company, and you can elect yourself to be subject to. See, that's what. If you see it here, the first concept is whether you have chosen to be a regular taxable person. So it is even though he is in mainland or maybe in a free zone or a designated free zone, he can just opt for it, just a tick. Yes, I want to be a regular taxable person. That's fine. He don't need to bother about all this. He
Okay.
can get the benefit of 375,000. If he's a very small, if his revenue is less than 3 million, he don't need to pay any corporate tax. So we cannot advise like just go with only mainland company because there are a lot of compliances in free zone. You can have a free zone company also, but elect yourself to be subject to corporate tax. That's it.
Okay, that's wonderful. So, for example, if somebody is coming to you or approaching you to, let's say for a consultation, or somebody who wants to know now what I need to do, so what homework should he do and come to you? So he should know that what activities will he be providing. He should know to whom is he going to provide those activities or whom he's selling his services or goods, And number three is what will be the percentage of the different activities that they are doing through that company. What is the percentage of revenue that they're expecting, right?
Right. So
And
basically, it is like, yeah, please go ahead.
what happens if, let's say, somebody planned to just do 80% something and 5% something, but in the due course during the year, that activity increased or something, increased more than 5%. So
Yeah,
if in
he'll be seized to be a qualifying free zone person for next 5 years. That is
but they
even
can,
more danger. You can see the enjoyment. Yeah,
okay, so the calculation has to be done. We
yeah,
cannot.
it should be. Yeah, it's not like what happened in the previous year. It is like basing on next year, what how it is going to be. It should
Mm.
be like futuristic,
So they should put a cap on, they will have to pre-decide how much is going to their, how much is going to be
non-qualifying revenue.
exactly
How much is the
non-profit.
non-qualifying revenue? They should be clear. And also, the government itself has given a cap of maximum 5 million. For example, if someone is doing 500 million, 500 million into 5%, 25 million. You cannot get 25 million benefit. Maximum is 5 million, whichever is lower, either 5 million or 5%.
And the moment it reaches the threshold, they should either stop it, or is there a possibility that they can even at any point of time declare and keep doing it or something like that?
No, the moment they cross it, the 5.001%, they will, as per, I mean, literal interpretation shows they will be losing for next 5 years. I mean, including that year, next 4 years. So total 5 years, they'll be losing that benefit.
Got it, got
So
it.
by mistake, someone is crossing that 5% on December 31st. The entire from 1st of January to December 30th, the current year itself, they will lose the benefit.
Okay, okay, noted. Ms. Satya, like this was an amazing session, and I
Yeah,
think this is
just yeah,
yeah.
we have one thing like what is that we have for the participants like over this. So what how we can help you out is we start with the basic CT registration, corporate tax registration. Even by yourself also you can do with few documentation. But then if you want us to help out because there are a lot of back and forth, there are a lot of questions, queries comes from the FTA. So we
Yes.
can help you getting the registration. But however, it is also some kind of task where you can do it by yourself
Mhm.
unless you want us to take it up completely. The major thing what we can do for you is the impact assessment. So we will study your complete business right now, how what kind of processes that you are using, same like how we have discussed now. So what is your current revenue, how much you are expecting, how much it could be non-qualifying, how much can be qualifying. So we will do the complete detailed assessment and we can help you in the tax plan, how you can do. Like what if you have a branch, for example, just let me, it's not a tax planning, but out of just for the discussion only, don't take it as a planning tool or anything. If you are providing services both to free zone and also to mainland company, and the proportion is 50-50. So to mainland company, you are giving 50% proportion and 50% to free zone. What we can advise you, maybe set up a branch in mainland. Don't have a new company, but at least have a branch in mainland. So that may be helpful for you. Or maybe we can devise different other mechanisms to come out to make sure that you are complying with all the six conditions.
Mhm.
And we can give the training to your staff because there are a lot of bifurcations you have to make in your expenses. Not that all expenses are eligible for your tax corporate tax purposes. So we can help your team, your accounts finance team. We can train them, and we can also give you some standard operating procedures, how documentation can be done, and what kind of records you should keep to prove your adequate substance and TP documentation and all. And we can be your like your retainer, and we can give you ongoing support. So that's all. That's what we can offer from our side to our clients.
Okay. Thank you so much. Yeah, it was a very, very, required session, and I think for people who who are absolutely laymen or absolutely new to these informations, I think we will need two, three more sessions to absolutely understand, or it's better that we just outsource it to you so that you can take care of it. But however, I know even if we are outsourcing, a little knowledge or educating ourselves is very important. Uh,
Yes.
so, so it was amazing. So, Mr. Satya, please let our audience know how can they contact you if they want to go for further consultation. What are the
Yeah.
ways that they
So
can get in touch with you?
okay. So on the screen we have given both our number. contact number and also the LinkedIn. So the QR code, if you are interested to use the QR code, you can use the QR code, or maybe you can just type like Satya Bharat. You can get it in the LinkedIn. So you can follow us in the LinkedIn. So we are conducting a lot many sessions on this, and we just conducted few sessions on Ministerial Decision 134 transitional provisions. So you can just follow so that you will be updated with our webinars or seminars that are coming up. You can contact us anytime for any of your requirements.
Hello.
Yes.
Yeah, sorry, I think my laptop got little discharged. Okay.
Okay.
So I think our audience we have taken the picture, and for any further details, feel free to contact Mr. Satya. We have some more guests complimenting that wonderful session, very informative. Thank you, Ms. Lakshmi, for attending our session. We have Mr. Gaurav Sharma, very information session. Thank you so much, Mr. Gaurav. Hope you feel free to contact Mr. Satya for further consultation. So, our guests, as you know, that if you want to know more, you can feel free to get in touch with Mr. Satya. So, here I would like to say thank you, and we will sign off for the day. And we will come again next time, bringing something new, and a new topic which can help you run your business seamless. So, good evening, and thank you so much from Rupa Jha, Blackstone Business Setup Services. Thank you, Mr. Satya. Thank you so much.
Thank you, everyone. Thank you, Ms. Rupa.
Thank you.